The candlestick patterns essential for your trading. Taking into account the figures formed by Japanese candlesticks is one of the fundamental skills for the trader. Let us briefly remember that the candle is generally made up of a body and an upper and lower shadow. A green candle indicates that prices are rising. A red one indicates that prices are falling. At the ends of the body, there are the opening and closing. At the ends of the shadows, the maximum values reached. Let's now move on to the patterns formed by candlesticks, the purpose of which is to predict the future behavior of the market, what we traders need. Pattern engulfing. One of the most important is the engulfing pattern formed by two candles, the second of which has a larger body than the previous one, and whose color gives an indication of the future direction of the price. Engulfing bullish on the left and bearish on the right. Here are some examples. Here, a bearish engulfing pattern has formed. Entry after the pattern is confirmed, at the opening of a new candle. Expiry for binary options, approximately 2 candles. Here's another example. Next candle, opening entry. Pattern Doji. Doji is a candle with a very small body and long shadows. It highlights a certain indecision on the market, which finds it difficult to proceed in the same direction. Anticipate a possible reversal. Let's see some examples. We see that a doji has formed. Wait for a subsequent reversal confirmation candle. And we open the operation. Let's see another example with the doji pattern. After the formation of the doji, we await a new candle that confirms the change of direction. When it closes, we open the operation. Pattern momentum. It is made up of 2 candles of the same color. The second is about 2 or 3 times larger than the first. It's a continuation pattern. The price should continue in the same direction. Here is an example. To confirm the pattern, we open the operation. In this other case, we have a bearish pattern. Marubozu pattern. Marubozu is simply the name given to a candle with a large body and no shadows, like the central one in the figure. Let's see 2 examples. Marubozu bullish. Marubozu bearish. Hammer is shooting star. They consist of a small body and a long shadow at one end. Both indicate a continuation of the market's direction. The hammer has the body up and the shooting star has the body down. Let's see an example. After a downtrend, a hammer appears. At the close of the candle, the operation opens in the opposite direction. Conversely, after an uptrend, a shooting star appears. At the close of the candle, the operation opens in the opposite direction. In the description, link to the complete post with free PDF to download. Don't forget to subscribe for future videos.